Hi, it is Troy Stavros with Doorbell Real Estate, and it is time for our monthly market update. We are looking at all of the data through the month of July, now that we are well into August, and take a look at how things have fared here in the East Tennessee area. We're going to look at all of East Tennessee as a whole. We're going to look at Knoxville. We're going to look at Farragut. We're going to look at all of the counties in the surrounding areas and just see how things are stacking up. Obviously, you may be hearing things in the national news about downturns and things of that sort, but always remember real estate is local, and we're going to take a look at what is happening locally right here in East Tennessee. Let's get started. So let's start with the East Tennessee market as a whole. We're going to be comparing July of 2022 to July of 2021 and see where we're at compared to 1 year ago. So home sales are down 2.5%, not a big number there. Pending sales are down 3.3%. Inventory of homes has increased slightly to up 3.8%. New listings are up 7.1%. So this is good news for home buyers that we're seeing a little bit more inventory come on the market. The median sales price is continuing to rise. From 1 year ago, we are up 23.05% as a whole in East Tennessee, with the median sales price coming in at $319,940. The absorption rate that we're looking at here, that is the amount of available inventory. And for this number, we're looking from month to month, not year over year, because we want to see if we're trending up or trending down on a monthly basis. And we are up slightly from 1.64 up to 1.92 months worth of inventory. Still under 2 months of inventory in all of East Tennessee, which is still incredibly low, which is why we are seeing the median sales price continue to rise like it is. All right, let's jump over into Knoxville. So these, let's take a look at the numbers here and some of the stats for all of East Tennessee. When we look at you can see the line in the absorption rate is continuing to go up. That's kind of seasonally adjusted. As things go through the winter, they come down, and then they always typically go up in the spring and summer. But we're seeing our inventory numbers continue to rise. That is a good thing for buyers. Listing prices are holding steady and slightly increasing as well. As we look at our sold to list ratio, that means the number here where we're looking at that number, if it is above 100%, that means on average homes are selling for over list price. If it's under 100%, they are selling for below list price. So we are seeing the prices come down a little bit as far as in East Tennessee as a whole. You can see that it has come down to just about between 98 and 99% from the sale to original list price, and from the sale to list price is coming in just below 100%. So we are seeing a little bit more negotiation happening on homes in East Tennessee as a whole. Days on the market that we can see are actually they're still going down. On average in all of East Tennessee, we're right around 15 days on the market. All right, let's take a look at Knoxville. So Knoxville compared to last year, home sales are down 10.5%. Pending sales are down 8.8%. Inventory of homes is actually down 7.3% in Knoxville. And when I say Knoxville, that is any property that has a Knoxville, Tennessee address. So we still need more inventory of homes because we are down 7.3% compared to last year. New listings are down 2.3% compared to last year. And because of the low inventory, we are seeing the median sales price continue to rise, and it is up 21.43% compared to last year, with the median sales price coming in at $340,000. As we look at the absorption rate, we are seeing the month-over-month inventory tick up a little bit from 0.92% to 1.17 months worth. So at least we bumped over from less than a month's worth of inventory in Knoxville to a little bit over a month's worth. But that is still incredibly low, and why we are seeing prices rise like they are and continue to rise. Let's look at some of the stats here. Number of listings. We said that inventory is still down compared to last year, but at least it's heading in the right direction. It's starting to increase. List prices are continuing to increase as well, right along with that, because we're seeing the median sales price increase. We can expect listing prices to slowly increase as well. The absorption rate we talked about, it is increasing. That's good. That means inventory is rising. Sold to list ratio in Knoxville is still above 100%. So we're seeing the majority of homes here, as you can see in this, selling for above 100%. So you're still seeing homes selling for over list price. So remember that when you are negotiating, there's probably a pretty good chance you're going to have to pay what the list price is or a little bit over it. Median days on the market is still right around 10 days on the market. It's come down. It's bouncing right around 10 and 11 days. But just know that homes are selling quickly and there's still competition out there. If you're seeing home reductions, most likely what that is maybe some sellers that have been a little too aggressive with their pricing in the first place, and they are bringing their prices down to where they should have been originally. Okay, let's go on and take a look at Farragut. Compared to last year, home sales in Farragut are down 11.7%. Inventory of homes is down 7.3%. Pending sales are down 12.6%. New listings down 3%. And because of the lack of inventory, we are seeing the median sales price increase compared to last year 21.87%, with the median sales price coming in at $613,000 as of this month for Farragut. Absorption rate compared to last month, we are seeing inventory increase. Went from 0.87 months worth to 1.18. So much like Knoxville, we have broken the barrier of less than a month's worth of inventory to just over a month's worth of inventory, extremely low, which is why the median sales price again is increasing, and we can expect it to keep increasing until we see more inventory come on the market. Let's look at some of the stats here. Number of listings is increasing. Absorption rate is increasing. That's good. That's telling us we're getting more inventory. Sale to list ratio is well above 100%, so you can expect to pay list price or above more than likely if you are making an offer on a property in Farragut. And the days on the market is bouncing around. It has gone up a little bit to 10 days on the market, but that is bouncing around, and definitely things are selling quickly. Okay, let's look at Lenoir City. I'm adding this one this month because it was interesting what is happening in Lenoir City with inventory and with the median sales price. Home sales are up 12.5%. Inventory is up 5.1% compared to last year. New listings up 11.9%. Pending sales are up 10.5%. So all those things are up and heading in the right direction. But interestingly enough, much unlike many of the other places in Knoxville as a whole, East Tennessee as a whole, the median sales price in Lenoir City is actually, this is the first month, it's actually less than what it was a year ago. So it's down 0.77% and coming in at $335,389. The absorption rate compared to last month is actually slightly lower, so we're seeing less inventory on the market this month compared to last month in Lenoir City. But it's just interesting that this one little pocket, for some reason, in Lenoir City has seen the first decrease that I've seen over the last few months of median sales price compared to a year ago. Some of those stats, you can see the absorption rate is bouncing around. It's less than it was last month, but previous to that, it was increasing. List prices are steady to rising. List to sale ratio is below 100%, so you could probably make an offer, maybe a little bit more negotiating room on a property in Lenoir City. And days on the market there are right around 10, 11 days on the market. All right, let's take a look at the East Tennessee market county to county with the surrounding counties and just kind of take a look and see what's happening in each specific county. So in Roane County, available homes inventory is down 6.5% compared to a year ago. Pending sales are down 8.9%. And the median sales price in Roane County is up 26.19%. That is a pretty big number, that it is up 26.19% compared to a year ago. Let's take a look at some of the stats. Number of listings are increasing, and they're kind of going up and down. Listing prices are holding steady. Absorption rate is increasing, so we are seeing more inventory come on the market. The list to sale ratio in Roane County is below 100%, so you might have a little bit more negotiating room in Roane County. Days on the market coming in right around 12. Okay, Knox County. Inventory is down 6.6% compared to a year ago. Pending sales down 8.3%. And the median sales price in Knox County is up 22.83%. You can see here that the number of listings is rising, so we're heading in the right direction, getting more inventory. Listing prices are on a steady climb as well. Sold to list ratio is above 100% in Knox County, so you're going to have a little less negotiating room in Knox County because there is less inventory there as well. Look at the days on the market. You're right around 10 days on the market there. Anderson County is down 5.9%. As far as available inventory, pending home sales are down 7.1%, and the median sales price in Anderson County is up 17.27% compared to a year ago. The number of listings went down in February and then has been rising since then. Listing prices have also been rising in Anderson County. If we look at the absorption rate, it has been a steady climb since March, but still well below where it was a year ago. Sold to list ratio in Anderson County is just under 100%, so you're not much negotiating room there, but you can get a little bit off the list price there, possibly in Anderson County. Days on the market there, right around 12 days on the market. Okay, Loudon County, which is, we talked about Lenoir City earlier. Lenoir City is in Loudon County, so let's take a look and see what's happening on the county level there. So Loudon County available inventory, unlike all of these other counties we've talked about so far, is up 21.1%. So there's 21.1% more inventory in Loudon County right now than there was a year ago. Pending sales are up 14% in Knox County. Also different compared to what we've talked about already. When you have more inventory, then you're probably going to have more pending sales because there's more properties for people to be able to buy. The median sales price in Loudon County is up 10.14%, quite a bit lower than what we're seeing in the other counties, but that is because there is more inventory. When there's more inventory, that means there is more supply, less demand because you have more homes available for people to buy. Therefore, the median sales price won't increase as much as it would if there is less supply and more demand. Let's take a look and see what's happening. The number of listings has been increasing slowly and going up since April. Obviously, we said that there is more inventory on the market today, quite a bit more than there was a year ago, and the sale to list ratio is down right around 98%. So like we said, in Loudon County, you have the ability to probably get a little bit more negotiating room for a home. Days on the market there is up right around 14 days on the market. Sevier County inventory is up 25.1%. Pending sales are down 2.1%, and the median sales price in Sevier County is up 33.33%. That seems like a lot, but if you've been watching these every month, you know that this number keeps steadily going down. I think that's probably because we are seeing there was so much inventory on the market, it's kind of getting soaked up. So therefore, the median sales price is starting to go down because we still have over 25% more homes available in Sevier County right now than there were a year ago. So that will push the median sales price down because of supply and demand. As we look at the number of listings, they've been coming up since about February, March. The absorption rate has been ticking up as well since March, but is actually significantly lower than it was a year ago. Sale to list price ratio is just under 100%, so you might be able to do a little bit more dealing in Sevier County. And days on the market there coming in right around 11 to 12 days on the market. And then Blount County is available inventory is down 1% compared to a year ago, so it's basically the same. Pending home sales are down 6.6%, and the median sales price in Blount County is up 24.58% compared to a year ago. And those details, you can see a slow climb in number of listings as well as listing prices. Absorption rate has been increasing since about March, April, and has gone up actually considerably, just under 2 months, but still all of these are still well below where they need to be from a historical place. I mean, you're going to still be in a seller's market anytime you are under 5 months worth of inventory, and everything that we've looked at so far is only about 2 months worth of inventory or below. So that tells you how little inventory we have available here in East Tennessee. Let's see. There we go. So let's and then Blount County sale to list ratio is just above 96%, right about 97%. So you can get a little bit more for your money, maybe a little bit more negotiation room in Blount County. Days on the market there coming in right around 11 days on the market. Okay, that was a lot of information. Let's talk a little bit more in general about the market before I let you go. But just judging from that, we're still kind of where we were last month. Low inventory levels, which are still pushing prices up and will continue to push prices up until we see more inventory come on the market. When you're considering the state of the housing market, pay attention to local market conditions. I've talked about this before. Many market trends happening nationally are either one, much less pronounced, or two, not happening at all here on a local level. So much like it was here during the Great Recession, East Tennessee's housing market responds differently. And it's responding differently now to higher mortgage rates, and it's responding differently to much of the things that are happening in the economy. So if you're seeing things on the national news about prices falling, remember, real estate is local. Look at the local market, and you can see right here from the data what is happening here in East Tennessee. All right, let's look at some other details of what is happening here locally. When we look at some highlights, the typical home sold was about 1,800 square feet, 3-bedroom, 2-bath. That's probably your typical home sold here in the East Tennessee area. We talked about housing inventory trending upward. New construction represented about 8.9% of total home sales, though move-in ready new homes accounted for only a small portion of total sales. Over 50% sold over list price. So you can still expect competition out there, and you need to remember to put in your best offer first so you can get something under contract, because People are still struggling to do that, but if you are having trouble, we would love to help you get something under contract, because we know that many people have been trying to do that for quite a long time. A lot of people are quitting their search, which they really shouldn't, because now is really the time to continue steadfastly to find a property, because prices, because of the inventory, are going to continue to rise. So by waiting, it's just going to cost you more later on. We are seeing some signs of moderation in the market. Things are slowing a little bit, but when I say slow, that is far from going backwards. Slowing may mean going from 23% increase year over year to 20% increase year over year. That's still quite a bit of an increase year over year, and considerably higher than it was pre-pandemic. So you can still expect prices to continue to rise. The home building industry continues to face significant challenges. Bottlenecks throughout the supply chain have yet to subside, and with inflation reaching super high levels, highest levels since 1981, material prices were up 21% year over year in the second quarter of 2022, with consistent double-digit price growth across categories. According to estimates by the National Association of Home Builders, lumber prices have increased enough to add $14,345 to the price of an average new single-family home, and $5,511 to the market value of an average new multifamily home. So material prices have actually risen across the board, and increases were not limited to lumber, and that suggests that material prices all along have likely added in excess of $30,000 to the price of a new home, if not more. So keep that in mind if you're looking at new construction. The prices are still going up because of material costs. Let's talk a little bit about the housing bubble. People are searching that term more and more these days because they think we're in a housing bubble. They remember what happened in 2008, but we need to remember that this market is nothing like it was in 2008. I know that sticks in people's minds because it wasn't that long ago. And when you think about weird things happening in the housing market, that's probably the first place your mind goes. But this is not 2008, and let's look at a couple reasons why. Mortgages are structured differently. So the kind of subprime lending that propelled the 2008 crash is a much smaller and more regulated part of the market today. Adjustable rate mortgages made up just a fraction of new originations over the past 2 years, and the typical credit score for home buyers was a near record high in quarter one of 2022. So where subprime loans kind of fueled that whole thing in 2008, that is not happening right now. Also, housing inventory now remains low. While new construction trended upward over the last 2 years, East Tennessee is still thousands of homes short of meeting buyer demand, and active inventory is only about half of what it was pre-pandemic. So that's just pre-pandemic. Inventory was high when we had the housing crash in 2008. Right now, super low, completely different. Buyer demand remains high. Even as higher mortgage rates have exacerbated housing affordability, East Tennessee continues to experience robust buyer demand, largely because of its status as a migration hub. Unlike renting, locking in a fixed-rate mortgage now can protect you against future increases in housing prices. Additionally, home price growth has historically outpaced CPI inflation. So buying a home can be, and real estate is historically a great hedge against inflation. Also, a market correction is not the same as a crash. So a housing market has shown signs of moderation in recent weeks, like we just talked about, which is the intended result of the Fed's recent rate hikes. But there's no evidence that a slowdown in the market will be anything like 2007 to 2009, at least according to the economists that are out there. So we are not in a bubble, and you can't expect to happen today what happened in 2008. Mortgage rates are continuing to rise. I mean, they're bouncing around now, right around 5.5%, 5.25%. At one point, they were up to 6%. So that has slowed things down in the market simply because at the beginning of the year, they were just under 3%. So that's a big change. So it has affected the affordability of homes and what people can afford. But we are still seeing plenty of people out there in the market right now looking to buy a home. And I wouldn't let the mortgage rate stop you, because a mortgage rate can always be refinanced to a lower rate in the future if rates go down, but prices can't be changed, and prices are going to continue to go up. So the longer that you wait, you're going to pay more for a home. That's just the reality of it. You can always refinance your loan, but you can't refinance or change the future price of your home back to what it was a year ago. Ask people who wish they bought 2 years ago. All right, let's just take a look and see if there's anything else here that we need to go over. Let's just talk real quick about the rental market. Data for quarter two of 2022 suggests Knoxville's rental market is still exceedingly hot, as both occupancy and annual rental growth remained near record highs. Higher mortgage rates are likely to push more households out of the for sale market, placing even more pressure on Knoxville's red-hot rental market. As far as rents, effective rents in the Knoxville area were up 19.31% year over year in quarter two of 2022, outpacing the annual rent growth of 14.49% nationally. So rents have increased faster here in Knoxville than they have nationally. On average, effective rents are nearly 30% or $366 higher than pre-pandemic levels across the metro area. Another important measure of rental costs is trade-out rent growth, which is the percentage change between the previous lease rent and the new lease rent for the same unit. Trade-out effective rents were up an average of 13.48% year over year. So same unit, year later, up 13.48%. Occupancy rate for rentals was 98.6%. ranking number 2 among 66 markets in the South and number 7 among the top 150 U.S. metros. So we are seeing quite a bit of demand for rentals here as well as home purchases. And as far as the supply, approximately 1,000 new units were delivered in the year ending in quarter 2 of 2022, expanding the local inventory of rentals by 2% over the past year. Competitions are slated to remain around the same level, or completions are continued to remain around the same level, with an addition of another 1,000 units over the coming year. So we are seeing more multifamily come on the market. So there will hopefully be some easing in people that are struggling to find a place to rent as well. Well, I hope that is a lot of information, but hopefully it is helpful to help you determine what it is that you should do. It's always important to be educated when you're making a decision, especially one that is this big and this important and is typically the largest financial investment most people make is buying a home. But remember, if it's something that you're considering doing, the longer you wait, the more it will cost you. So with inflation and with prices rising and low inventory, if you're going to be here in East Tennessee, you are much better off to buy something now than to wait and pay more later. If we can help you, we would love to. My team here at Doorbell Real Estate would love to serve you in any way that we can, whether that's just answering questions or getting you out to look for homes, finding you homes, or helping you sell a home. We look forward to helping you. Just reach out to us, and we will talk to you soon.